what happened to silver in 2020 was, one, it went up, and two, it went up on investment demand that's been so substantial that it's really gone to the record books. If we are to see something like that take place in this year, 2021, I think that you'll start to see a squeeze in the silver market. Oh, David Morgan said there's a squeeze. Well, I'm saying, yeah, a squeeze doesn't mean like a short squeeze where everyone's panicking to buy, but it does indicate that there'll be upward pressure on the silver price. I truly believe that.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today, one of the top silver experts, David Morgan. David, thank you so much for joining us today.
Elijah, it's good to see you again. Here it is, January 2021, and what a year I think we have in store for us.
Definitely. I'd like you to really expand on that, kind of what you see for 2021, because precious metals currently are still in the pullback we've seen really since the beginning of the year. They rallied into year end a little bit after the New Year's, and then they pulled back significantly, and we're kind of still in that slump. So what do you see for precious metals going forward?
Yeah, well, I'll get right to it. Number one, I'll start with copper. I mean, copper made a huge run at the end of the year from like October-ish, moved on up to about the 370 level. It's consolidating, a high-level consolidation. That's pretty bullish, meaning that, copper is an indicator for industrial demand. So, of course, there's a lot in the EV market, the electric vehicle market. So that could be showing us that. Gold, as you said, consolidating indecision pattern, kind of getting this more volatile move up and down. I don't think there's a lot to worry about longer term. In the short term, it's really hard to call. I'll say it's going to continue in a trading range. Seasonality is still favorable to gold and silver in the first quarter of every year, but that doesn't guarantee it. I do think we'll see from January 1st to April 1st probably a net gain, but not what I was expecting a month ago. The HUI, which usually is a leading indicator for what the metals are going to do, it's under both the 50-day and the 200-day moving average, which is a sign of weakness, obviously. And if you look at it carefully over the last 3 months or so, I'd say 2.5 months, we have been in a channel formation, indecision pattern, back and forth, up and down, meaning just a trading range, somewhere between the 320 and the 280 level. And that continues. So again, a trend in motion continues till it actually stops. And right now the trend is consolidation and going sideways. So that's true for gold, true for silver, and true for the HUI, which I just mentioned. Platinum, palladium, I put out to our readers, and I've said it once before in the public. I think there's a good trade to be made here, or a swap or a spread trade, which would be short palladium and long platinum. The Platinum Guild put out a information that I do rather substantive, that it looks like a lot of the automobile catalytic converters will be switching from palladium into platinum because it can be used for both gas and diesel, contrary to what you've been told through, let's say, the mainstream press. And if that's true, and I believe it is, if every indication it will take place, then that will put downward pressure on the palladium demand and upward pressure on the platinum demand. So I've traded recently out of palladium and into platinum. Silver, we talked about, looks similar to what it always does. I mean, these sharp spikes up and sharp spikes down, but it's actually holding pretty well. I'm looking at the chart as we talk, and it looks, from what I'm looking at, I've got to expand it, but I'm making a guess. I think we're still above the 200-day moving average is 22.50. We're at 25.50, so we're $3 above the 200-day, and we're just slightly above the 50-day moving average. So we're basically still bullish on silver. So I think I covered that.
No, the mainstream has been kind of pointing to rising rates as the reason for why precious metals have fallen recently. What is your perspective on that?
It's nonsense. I mean, you can make the argument, and you can correlate almost anything. I mean, this correlation, and I use it, and it's a good, if the correlation is really strong and it makes sense, then you can use it as a tool in your toolbox to analyze a market. So, if there's a high correlation between gold and silver, they're both precious metals. They're both needed for the same thing as far as safe haven status. Of course, silver has industrial uses far more than gold, but there's a lot of things that line up. But you could also correlate, silver's price movement with phases of the moon, for example. I mean, you could do it with almost anything. So interest rates do play an important role in the price of the metals, but not at these levels. So I'll explain. When gold was in a runaway market in late 79, early 1980, when Volcker, as head of the Federal Reserve, put interest rates up to 20%, that killed the gold market. And that had an absolute effect because now, with inflation running officially at 13%, and you put interest rates at 20%, you're getting a 7% real rate of return above and beyond the inflation rate. So we want to talk about the real rate of return. So you got to take the interest rate that is provided by the Treasury, the Treasury bill, Treasury note, Treasury bond, and determine whether that's a real rate of return or not. 1980, obviously huge, and it killed the gold market. Now we're sitting at 1%, 1.5%. I mean, it's just pathetically small yields when the official inflation rate is about the same level as the interest rate on the Treasury markets. But the true rate of inflation using the CPI of old, where you actually look at energy and you look at food prices, is somewhere around 7 and 9%. So until you get into that Volcker kind of situation where the real interest rate is 3 or 4%, 2% above the real inflation rate, it's really not going to have that big an effect on gold. Has it affected it? You can make the argument, you can correlate it, you can say yes. I'm saying no. I'm saying, yeah, you can use it, you can make the argument. Well, my argument is no, it's not really. It's a lot of other things, and a lot of it has to do with where the money's flowing. The money is flowing for safe haven into the cryptocurrency realm primarily, and the stock market for those that are risk off that think, good times are here forever. And I've, been waffling on my stock market analysis the last few months, like 6 or so, because in a inflationary environment where basically whatever the currency is being degraded at such a rate, stock markets continue to go up, up, and up because people that have savings put it in the stock market because it's a lot smarter to put it there than in the bank. But usually history's shown again and again that stock market gain is not commensurate with the amount of destruction of the currency, but better than being in the bank. So if you have it in precious metals, you're probably going to have a true gain in value or purchasing power. In the stock market, you may stay even or slightly less. And if you keep it in the bank, you're destroyed. So I'm not saying that's happening overnight. I'm not saying that that's absolutely what's happening. What I'm saying is that I'm thinking about it in that way now because the nonstop, unceasing amount of, I'll call it quantitative easing, even though that term isn't used anymore. The objective truth is they keep throwing out more and more funny money. In fact, as you know, Elijah, the amount of new funny money printed in 2020 was roughly 20% of all the debt that had been accumulated from the beginning of time, more or less, until that year. So that means 1/5, 20% of everything that you own, in theory, has been degraded by that much. So your salary, and this isn't true, it's just the idea, and it may manifest in some of these areas, that your salary has been reduced by 20%, your home value, your food, everything that you pay for, in theory, has been reduced substantially due to this unbelievable amount of new debt. And under the current political climate that we're witnessing, it'll probably get even worse. And I'm not going to take sides on any administration. It's inevitable that the further we go into the debt destruction or the currency destruction, the more faster you have to run to stay in place, as a metaphor. You just have to keep pumping in more and more and more and more. And it really doesn't do any good other than perhaps the stock market. And of course, at some point, the metals will reflect it, and the cryptos are reflecting that right now.
You mentioned how it seems like the cryptocurrencies could be sucking some demand for a safe haven away from precious metals. Do you see that continuing, or is there a change coming up where people will go into gold and silver?
I think that it'll go into gold and silver predominantly in the not too distant future. I mean, I'm pretty neutral to maybe slightly positive on some of the cryptos, but the overall theme is the run to gold is not going to stop because of the crypto market. The crypto market is not a tier one asset. Gold is. I mean, the whole system was founded on a gold standard in the, Bretton Woods. I mean, basically it was the dollar standard, but under that agreement, everyone could take their dollars, 35 of them, and get an ounce of gold for it. And of course, that was maintained until it wasn't on August 15th, 1971. So, history hasn't forgotten that, and neither has the banking system making gold a tier one asset. You don't see Bitcoin as a tier one asset. Also, you don't see too many banks moving into the crypto world in substance. But I do believe, and I've said it in the Morgan Report for months now, that we're shifting into a digital age for the financial system. I think that the banks, the powers that be, and even some of the private entities want to see everything digitized, everything on a blockchain, and I think we're moving that direction. That still doesn't negate the run to gold that I see happening in the present and the future. If we can just back up, I'll ask a question myself. What happened to silver in 2020 was, one, it went up, and two, it went up on investment demand that's been so substantial that it's really gone to the record books. The amount of silver going into the ETFs is something around the 350 million ounce mark. And the amount of, let's say, coin and bar demand by retail, if I have it right, and I'm waiting for the official numbers, so I'll just stab at it, but maybe 200 million. So you're looking at perhaps 50% of the total mine supply in a given year going in for investment demand, both retail and institutional. That is very important to note. If we are to see something like that take place in this year, 2021, I think that you'll start to see a squeeze in the silver market. Oh, David Morgan said there's a squeeze. Well, I'm saying, yeah, a squeeze doesn't mean like a short squeeze where everyone's panicking to buy, but it does indicate that there'll be upward pressure on the silver price. I truly believe that.
So if we're going to see this extreme demand from the investment side, another thing that's happening alongside that is that we have a Biden administration that is going to push for green energy. We've already rejoined the Paris Agreement, and it seems like that's what Biden wants to do, is just more green energy, which just means more industrial demand for silver. So it seems like we have kind of two situations happening at the same time, which should just increase silver demand even more.
It does. I mean, solar uses a great deal of silver, somewhere ballpark figure in the 100 million ounces a year range. That would be probably the base, probably go up from there. You've got California stating, that new homes need to incorporate solar. You've got a new study by the Silver Institute stating that by 2025, which is really only 4 years away, that the electric vehicle market, the automotive market, taking into consideration that electric vehicles will be coming more and more to the fore, will be somewhere around the 90 million ounces per year mark. So in a few short years, you're going to see the amount of demand for the automotive industry for silver almost equal to the photovoltaic demand. And that doesn't count into these one-offs like the battery usage for silver that could come into everyone's consciousness over the next, few months or year or so. I don't know. Samsung has got a superior, I think, battery that could be used in electric vehicles. They've got the maglev train that is, highly efficient. You don't see many of those in the United States. And I'm not saying the Biden administration is even proposing that. What I'm suggesting is that high-tech society uses a great deal of silver. And there's lots of these areas of high technology that the United States, hasn't really incorporated, like superconductivity, that uses silver. So I think there's going to be not only what you outlined and we were discussing with the obvious, automotive and photovoltaics, but there's these other outlying possibilities for the silver market. The one that's not talked about a lot, I do, but is the biocidal properties. I mean, some of these masks are impregnated with silver because it does kill germs. It kills pathogens. It's a biocide. So, not that that's going to be a huge demand, but it brings awareness to the silver market. You're seeing it more in clothing, smart clothing, the IoT, the Internet of Things. All this stuff takes silver. A lot of it's in minuscule amounts, but when you're talking billions of applications, even at the 1 gram level, it starts to add up, or even at the 1/10 gram level, it starts to add up. So there's a lot to think about on the industrial side.
Exactly. And you mentioned how a lot of these technologies really take just a little bit of silver, but it adds up. And that's actually kind of an important point, is the demand is very, it's very inelastic, right? So because they use so little, even if the price doubles, it's not going to cost a lot more to produce these items.
Exactly. I mean, look at, take anything you want. I mean, unless we're talking silverware or silver jewelry, almost any other application, solar panels, a laptop computer, a cell phone, a DVD player, a touch screen, any of that stuff, the amount of silver that's in the product is such a small percentage of the cost of the product, it's almost meaningless, which is price inelastic. So if the amount of silver in a cell phone, for example, is 0.04% of the cost of the total phone, and it goes up 10 times, it's not going to really affect the price of the phone very much. The company might make the excuse, silver's gone up so much, we're going to increase the price of the phone, but they basically be lying, because it really doesn't affect the overall cost hardly at all, even if the price went up substantially. Now, that wouldn't be true. Again, I'm repeating myself, for effect, for silverware or silver jewelry or something that has a high amount of silver in it, like, let's say, silver zinc battery like the military uses or something like that. But again, in most applications, it's so insignificant, it's not going to cause the price of the refrigerator or the, again, touchscreen panel on a microwave or any of these other applications that we know of to really change very much at all.
Now, moving to viewers' questions, Frank is wanting to know your perspective on what is a good balanced portfolio when it comes to precious metals. How much should people be invested in the physical metal?
Yeah, that's a great question. And of course, I've tried to do my best to help people as much as possible. That doesn't mean I've got it right, but usually I give the best guidance I can. So on our paid membership, the first thing that you get is a PDF and a little video by yours truly talking about how to use the Morgan Report. And in that, I go through the hypothetical saying, if you are an investor of this age group, I would consider putting this much into physical metals and this much into basically the mining or resource equities. And if you're at this age, I would consider putting this much in physical metal and this amount. So I do it by percentages. I outline my thinking why. But the general idea, the guidance that I give is that the older you are, the more you probably want conservative investments, which means you actually would probably favor gold over silver. So if you're in your late 60s or something, you wouldn't want to be 90% silver and 10% gold. You'd probably want to be something, more favorable to gold, because gold has doesn't have the volatility that silver has. And you would also want to favor, top tier cash rich companies. So I do outline it. I don't know. It's not one size fits all. I mean, I've got some, 80-year-old people that are really heavily on the silver side. I've got some people that don't invest in metals at all. I have some people that won't invest in stocks at all. but most people have a blend. And what's perfect for you, I don't know, but I think I outlined it well enough. I personally, at my age and my disposition at this point, is almost half for me. That's a lot to be physical, but I don't have the time for the equity side as much. I got my long-term investments that are, shown in the mortgage report. A lot of these things I've held on for years, and I picked them right early on, and they're still performing quite well on the long term. And then, of course, we do change the portfolio. We moved in and out of a lot of things, but right now it's mostly precious metals, some uranium, some asymmetric trades, technology stock, and we just started getting into the cryptos in a, let's say, in a speculative way, but our timing's been near perfect. The Ethereum is up, I think, double from what we recommended, and a couple other ones I won't name that are doing pretty well. But again, these are speculations, bet a little to win a lot kind of situations.
This viewer has read your book, Second Chance. He says it's a great book, by the way. He's wanting to know about when it comes time to sell. I think that's something we talked actually about in our last interview, is there will be a time when it's time to sell silver. And he's saying, how would you, for example, if David Morgan had a couple monster boxes of silver, buried in an undisclosed location, how would you go about selling that?
Well, the easiest thing to do is sell it back to the dealer you bought it from. And as you know, Elijah, I buy from almost everybody I trust. So I bought some from Mike Maloney. I bought some from Andy Schechtman. I bought some from some of the online dealers. I bought some from some of the wholesalers. I know like the wholesalers that deal with Miles Franklin. I mean, I've spread it around, but, so I could probably sell back to almost anybody of size. If you're buying off a coin, pawn shop or eBay or something like that, you're kind of on your own. But if you establish an account with a major dealer, there shouldn't be any problem selling back to that same dealer.
Yeah, definitely. I know. Yeah, Miles Franklin definitely does that, and other dealers do as well. David Morgan, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you online?
Yeah, last thoughts are, I'm not sure what 2021 holds exactly. I have been concerned about the food and food supply situation. I'm still concerned about it. I don't want to overdo it and be too dramatic, but take a look. If you've got extra savings, you would be, in my view, better off buying some extra food than you would buying extra metal. I mean, metal is kind of at the top level once you have, a savings account, and you can cover your, let's say, loss of a job for 6 months or whatever. Then the next tier up is probably, precious metals. You really want to cover your bases first. So that's number one. Number two is, follow us. The best thing is to get on our free list at themorganreport.com. Just a name and an email. We'll verify it. You'll be on the free list. I do think that my days on YouTube are numbered, but I've got a mirrored account on Library that I don't talk about, but Webmaster has moved everything over there. So all of the work I've done for the last 20 years plus, if I heard him correctly, I think all of it or almost all of it is over there. So it's preserved for time immemorial until, we go down on the grid or whatever, trying to be funny. I think Twitter is, something you want to pay attention to if you're so inclined. You're kind of obsessive about the economic trends, the precious metals, what's important in my thinking. I do most of the tweets myself. A couple of my people that work with me have access to the account, and that's at SilverGuru22. So if you just go to Twitter and type in at SilverGuru22, you'll pop up. It'll be me. And again, I'm not a big Twitter guy, but I do usually post a few things, almost every day, I guess. So there's that. So I would just say those two are the best. Certainly get on the free list. Again, I have had strikes against me on YouTube. Some of the YouTubes I've posted on my community channel of my YouTube channel have been taken out almost immediately. Let's say alternative thinking on, let's say, the medical against, I would say against, alternative view to the medical establishment on some of the situations that we're facing together. on a global basis. So there's a lot going on here. I don't know the future. I know that it's unpredictable, yet I think it's easy to state that there's going to be more and more uncertainty as we move through the new year, but that also presents a lot more opportunity as we go through the new year.
Fantastic. Well, David Morgan, once again, thank you so much for your time, and God bless.
God bless you as well. Thank you, Elijah.